Hey everyone, good morning. Is everyone able to hear me clearly? I see that we got Itaro, we got Nick, we got Kelvin. Nice to see you here. Yamilu, nice to see you. Uh, Springfall, nice to see you too. Thanks for tuning in. Nice and early. ASAP, nice to see you too. Thanks for tuning in. All right. Hey Nick. Um, how was the holiday? All right. Yeah, in Singapore we had a public holiday on Thursday. Right. So some people extended it for the weekend, right? Get a little bit more. Oh, that's Daniel. Okay, let's see Daniel. All right. Yeah, I extended it for the weekend. Right, that's nice. I have I might I might have a video somewhere. Let me see. For those of you guys who wonder what happened on the weekend, I got a little bit allergies, right? Let me see. Yeah, it was fun. I tried jogging with my kid for the first time. Yeah, I can't find the videos here. Yeah, I tried jogging my kid for the first time. Good fun stuff. All right, maybe I'll show you guys later towards the end of the session. Just give me a second right now. I'm going to take a antihistamine. 1 second. Hey guys, sorry I'm back. That's, yeah, you guys, sorry I'm back. Yeah. Okay. Nick, nice to see you. Solomon, Paul, right? We got Path, Supergirl, and Test Test. Nice to see you guys. Thanks for tuning in. Right. All right. Good to go today. Goal. How are we doing on goal? We'll take a look at goal in a bit, right? So, today's session, as usual, remember that please send in your requests nice and early so that we can look through them through the analysis. Because we rarely ever have enough time to look through all of them towards the end of the analysis. So, if you have a request, specific request, please send it through. I'll do my best to get to them in a bit. All right. I think there weren't that much movements, but for the ones that we did call, right, it kind of more or less worked out quite nicely, right? I say we have pretty, most of them kind of worked out nicely. At least even those that were a little bit in the neutral zone, right? We did forecast it was like DXY. We said it was going to strengthen a bit before reversing, right? It worked out quite nicely. And I think Euro Aussie worked out even better, right? We will review the analysis together. We will review the analysis together in today's session, right? But for those of you guys who are here for the first time, right? Welcome to the pre-market live analysis with Desmond Leong, right? That's me, right? So it's a weekly pre-market we do right before the market starts. Depending on where you're tuning in from, right? If you're in Asia, somewhere like Singapore, right? It's about 4 a.m. here, right? So it's like I prepare everything. I literally prepare everything before I take my nap. I don't even call it sleeping. I just call it a nap, right? Because it's not a full like 7 or 8 hours, right? I'll be like, okay, I got 2 or 3 hours, right? Take a short nap, wake up, right? If you're tuning in from Asia, right? And yeah, if you're tuning in from UK, Europe, I think you that's one of the best places, right? It should be just about the evening for you guys, right? If you're over in Australia, it's about in the morning, right? So thank you very much for tuning in wherever you are. Midweek review, we might be going ahead with it, Daniel, right? Midweek review, we might be going ahead with it. But it's down to my capacity whether I have the energy to do it. So I will follow up with IC Markets. We probably will have that midweek review. I'll update you guys on that. All right. Watson, nice to see you. Solomon, yeah, Africa, 11 p.m. All right, it's nice, 11 p.m. is I think 9 p.m. is a sweeter spot than 11. 9 p.m., just finish your dinner, right? Maybe the kids, depending if you have kids or how old they are, right? Might be just about going to sleep, right? Pre-market comes at a very good time here, right? But yeah, that's correct, man. Um, Sweden, 10 p.m. Sweden, 10 p.m. Okay. All right. Now let's can you hear me now? Seb, can you hear my audio? Okay, good, good. Now let's begin today's session. All right, disclaimer, guys. Everything in this webinar is educational nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Okay. Now, our agenda for today, we'll kind of look at the key news events that's going to happen for this week first, right? So we are very strong on our technicals, but we will look a little bit at the news events. I usually prepare this a couple of slides on what I think are the big news events to watch out for. Okay. Um, my approach to trading, my approach to preparing for the market is to know when these fundamental news events are coming, right? But we don't necessarily need a view on them. That means we I call it the known unknown. You know it's coming, but it's an unknown outcome. So it's a volatility event, right? So I know that the RBA rate announcement is coming up, right? But I do not know. I probably know the outcome, right? But it's an unknown event to me, like how it's gonna really affect the market, or whether the market has fully priced that in, right? So to me, when you're trading, depending on your style of trading, right, the news events have a different effect on you. Okay, I'm going to repeat that again, right? Depending on your style of trading, the news event will have a different effect on you, right? If you are a short-term trader, scalper, right, talking about anywhere that trades on the 1 hour chart and below, right, news events are going to affect you a lot more, right? You see a news event come, right, especially a volatile news event coming, right? Or even like the non-farm payroll, all right? Is going to really move the markets a lot, right? And it might weak you out, okay? But if you're trading on anywhere from the 4 hours to the 1 day time frame, you'll notice that it does not affect you that much, right? 4 hours to 1 day time frame, usually you're a little bit more immune to the volatility of the news event, but you can still be caught up by the change in market direction, especially with news events. Okay, Samuel, thank you for tuning in. All right, so we will take a quick look at 1:10 a.m. at Pakistan. All right, fun stuff. Right, is anyone here awake? Is is anyone here at where they're from? Is it anyone at a 3 a.m., 4 a.m., 5 a.m. kind of timing? I have a feeling that I'm the only guy at 4 a.m. now in this part of the world. Yeah, I think the you can call it the earliest or the latest. Yeah, but I'm the only guy here about 3 or 4 a.m. Okay. Then the analysis on majors, we take a quick look, not a very quick look. We'll review, right? Oh, 6 a.m. is Sydney. All right. Okay. Here is 9:11, 6 a.m. Oh, Kelvin, 6 a.m. Thank you very much for tuning in nice and early, right? That is dedication to anyone tuning in at 6 a.m. Right? Really appreciate it. Right? And choosing not to watch the delayed broadcast, right? Okay, right. And then we do custom requests towards the end. One thing we do differently here than you'll notice in any other webinars out there is we will review what we made our course last week. So there's a lot of continuity to it. I will not just like jump into an analysis, right? We'll review, right? That holds us to the highest level of accountability. We get some right, we get most right, we get some wrong, right? So uh, if you're wrong, it's just part of trading, all right? We can never be 100% right. I'm still trying to go to that promised land, right? But there are some weeks that we get really 100% right. But most of the time, it's about 70%, right? Nick is asking, do you know of any other education sites I can use that's similar to how Baby Pips work? So I know Baby Pips does have um, Baby Pips does have this little course for you to go through, which is free. Now, Nick, I think Baby Pips is good for general knowledge. That means you probably won't be able to beat Baby Pips when it comes to that kind of general knowledge, like broad knowledge on the forex market. But if you're looking for other educational sites, right, you probably want to go for more in-depth analysis. No, like more in-depth teachings, right? Something I'm considering like holding myself to is more, yeah, it's more in-depth teachings, right? Like I say, Baby Pips itself good enough. If you want after Baby Pips, right, that's where maybe you can go a little bit into Investopedia, which explores a little bit more, slightly deeper, right? But I would actually pick a topic which might have intrigued you on Baby Pips and then do deeper studies on that. For example, Baby Pips is very good for introduction to Elliott wave and introduction to harmonics, but they're not good enough to really dive deep into understanding how Elliott wave works. That requires you to go dig deep into the book, like Elliott waves have books on them, right? Or on some forum threads really dive deep into certain strategies, right? So BAP is good for more generic, broad knowledge, but broad, shallow, not necessarily deep. Okay, I yeah, yeah, and of course, IC Markets have a ton of resources, more on the webinars actually that you can take a look at, right? Yeah, it's a do check them out too. All right. Um, Daniel, nope, I do not do mentoring. At least not yet. The reason is because it's more like I don't have the time. All right, so I feel like it might not be fair, if I do any mentoring to anyone. Right. It's been one of the biggest requests in the world. I haven't mentored anyone yet. Right. Besides my employees, in the office. Right. I try to teach them as much as possible. Right. Smart money concepts does work to a certain extent because smart money concept uses a lot of they call it liquidity traps and overlap, which is similar to what we call like overlap and pullback kind of support, right? They use a lot of market structure, right? I think smart money concepts is just a new and it's just a way that someone decided to name something, right? But it doesn't deviate too much from the core foundation of how technical analysis is done, right? Support and resistance is done, right? Just remember, for any, I don't subscribe to a single I don't so for those of you guys who are here for the first time, right, we're spending a little bit more time now just discussing about some and I like these sessions where you ask me some questions about trading and give my opinion on them, right? The I don't subscribe heavily to one single form of analysis. Like I will not overly rely on harmonics, right? I will not overly rely on Elliott wave, nor will I overly rely on smart money concepts, right? I think that as long as there's a bunch of people who are following a certain approach to trading, right? That means there is a little bit of success there. Now, the key thing for me is combining that success with other things, right? So we have the people who swear by harmonics, we have the people who swear by smart money concepts, and you got people who swear by Elliott wave, right? But often, sometimes they have differing results, right? You are trying to find the sweet spot, right? You're actually really trying to find the sweet spot where you are, what's the word for it? Just let me see if there's a way I can add a different scene over here. Can I just duplicate this? Yeah, can I just add a different scene? Give me a second, right? Are you guys here? Okay, yeah, maybe you go here. I think it'd be easier if I during sessions where I'm just like talking to you guys without referring to the webinar slides yet. I can have a dedicated screen so it's easier to see me talking, right? Easier to see my eye bags maybe, right? But yeah, so when it comes to trading, right, guys, it's more of a case of combining the different, how I like to have like confluence and combine different indicators. It's the same thing when it comes to your strategy, right? You want to find that you don't want to be over reliant on one group of strategy, right? It's almost like you're drinking the Kool-Aid for it, right? So you want to combine it, especially with different knowledge, like smart money concepts. If you combine it with momentum, Fibonacci, harmonics, right, Elliott wave, different parts of it, you realize that a lot of strategies actually are just variations of each other, and they give it a different title, they give it a different interpretation, right? Build a community around it, right? So I think smart money concepts, we got a there's a guide on YouTube that teaches it quite a bit, right? I respect anyone who teaches for free. I respect anyone who teaches and tries to further the knowledge of everyone, right? So I think it's good work on his part. It's getting more people to better understand. What he teaches is quite okay, but personally for me, I would try to improve it with a lot more Fibonacci, right? Momentum, a little bit of harmonics they can put into it. Harmonics is very heavy on Fibonacci, right? So I would try to improve it a little bit more on that, right? Kelvin, one day I'm going to start a course, right? Maybe, but not now, right? Start a university, right? Trustworthy, in-depth education that is. Uh, Another thing, Nick, is that you if you see a place that tries to try to charge you an arm and a leg, to learn something, right? To teach you something, I would try to apply a little bit of caution, right? On learning from them, because and knowledge is good, right? Knowledge, you can charge people for knowledge, right? I think there's nothing wrong with that. But if they're trying too hard, right? So my rule is that uh, the decisions need to come easy, right? It needs to sit well with you, right? And if you realize that a particular website is trying too hard, has a crazy squeeze page that's trying to push you to make a decision, right? I would stay away from it, right? The most confident people, right? Most confident people in their self, in their knowledge, right? They don't require that kind of squeeze pages, right? You seen me, right? You see me teach everywhere, right? You don't ever see me trying to form a squeeze page for you to like force into making a decision, right? So my personal take is that try to stay a little bit away from if you find something or someone is trying very, very hard to convince you, right, that their approach to trading is correct, right, or that you should be buying a certain course, right, I would kind of stay a little bit away from it, right? Do you trade yourself or mostly do? Seb, I do a bit of both, right? I used to trade a lot more, with less, with a lot more analysis. Right now, I trade a little bit more passively, right? And I focus a lot more on analysis, on teaching people to do good analysis, right? Because we do a lot more things for brokers, like producing the daily reports for IC markets, technicals and fundamentals, right? Webinars, reels, trading, trading view, everything, right? And I have a little bit less time to trade now. Also running the VIP rooms, right? Genesis and stuff, right? So literally running two business, right? So a little bit less time to trade, but of course I'm always in the market when it comes to when like when IC markets, when we need the highest quality analysis, I'll be there, right? On the pre-market to make sure that you guys get it. Yeah. Hey, Apruba, nice to see you. What education would you say one needs to focus on to move away from the general knowledge understanding of market economy, more like how you understand it? Do you use a smart concept and daily chart? My stuff, I think one of them, Peggy, might use it, might use a little bit of smart money concepts in trading, right? I think she has passed 6 different like prop trading tests so far, 2 more recently, right? So she just uses a little bit, but she uses more on like Fibonacci and what I've taught, right? But she combines it with a lot of stuff, right? So I guess one bit of advice, Nick, what education will you one need to focus on to move away from the general knowledge and understanding? I think having a good base foundation is very important, right? It sounds a little bit cliche, but understanding things at its core is very important, like chart patterns, right? We have a webinar on chart patterns on IC Markets YouTube, where I really break down the concept of chart patterns, right? A lot of people are very caught up in what are chart patterns, what's a head and shoulder, right? But if you really look at it at its very foundation, core, what chart patterns are, right? It's, whether it's consolidations, whether it's squeezes, it all starts to make a little bit more sense, right? But that for that to happen, you need to really understand the core foundation, right? So I went through baby pips thing at least 2 times, 3 times, right? I don't think it's that great for broad knowledge, but it's very good for no, I don't think it's very good for in-depth knowledge, but it's very good for broad understanding, right? Then you find something that's interesting, you dive in deeper, Investopedia, diving deeper into YouTube videos, right? So YouTube videos, I would very good for learning trading concepts. Okay. Um, I in terms of leverage, right? I'm a scalper, right? So I require a little bit more leverage than normal, right? When it comes to trading, because I put slightly larger positions, right? But I have a very tight stop loss and take profit, right? So that's the approach to scalping, right? So scalping, there's not leverage is not necessarily bad per se, right? It's just that it can amplify the good, it can amplify the bad, right? And of course, if left uncontrolled, leverage is gonna come back and haunt you and gonna hurt you, right? So leverage wise, depending on your trading strategy, okay, guys. Remember, if you have a trading strategy that take mostly day trades, swing trades, position trades, longer term trades, right? You might not need that much leverage unless you're holding onto a lot of positions at once, right? But if you're into scalping, high frequency trading, right, you need to you think about it, right? If you to risk 1% of your account, right, with a tight stop loss, right, versus 1% of account with a larger stop loss, right? The one with the tighter stop loss, just to risk the same amount of money, you need to use a larger lot size, right? And because of that, you're going to need a little bit more leverage. Okay. There's a number of leverage that's just I don't think a certain amount of leverage is ever too much. I think leverage is actually a nice thing to have, right? Just that you need to, with that Peter, is it Peter Parker, right? Spider-Man thing, with great power comes great responsibility. It's the same thing with leverage. With great leverage comes great responsibility, right? So what I have, one of my very few times I actually coached someone in the past, I actually told the person to start for lower leverage because he has he had difficulties revenge trading, over trading, chasing the trade, right? So when with lower leverage, right, he was actually structurally enabled to trade, unable to trade, right? When he wants to go into revenge trading mode, he realized that he doesn't have enough leverage and he cannot keep like loading up positions to trade, right? So you need to analyze your trading strategy and realize that, okay, at any point in time, I should not need like too much leverage. I might not need maybe more than 1 to 30 kind of leverage, right? And if you know if that's the case, right, and you notice that when you start revenge trading, you start loading up a lot, right, then maybe it'll be better to apply a little bit of control on yourself to trade with less leverage, so that you know when you, even if you really want to start revenge trading and start chasing your positions, right, when you try to enter a trade, you know, the account just says you don't have enough leverage, right, or not enough margin, right, and that will have an inbuilt kind of controlling mechanism, right, to prevent you from doing that. Okay. um that is right. Thank you, guys. Right. I will now go into the analysis today, guys. I will power through the analysis. Okay. Right. Thank you for your questions. I'll take more of them towards the end. Okay. I'm gonna power through. You guys know me, Desmond Leong, run award-winning research firm. All right. Yeah. Enough of me over here. Right. You know what I do. Let's go into the few key news events today. All right. This week, right? RBA, right? This week will decide whether or not to increase official cash rate by 25 basis points, right? So even though there's a 63% probability that RBA, you know, see my mouse over here, a 63% probability that RBA will hold rates due to factors like decrease in CPI, you know, there's good employment data, uncertainties in China's economy. It's important to take note that in the last two meetings, they actually unexpectedly hiked rates, right? So it's actually going to be a pretty fun news event to watch out for, because 63%, right, is, I wouldn't call it unfallible, right? There's a decent amount of chance that RBA could unexpectedly raise hike rates again. Okay. Next thing to watch out for, right? ISM manufacturing and services PMI in the US. Right, manufacturing PMI has been contracting for several months, not expected to improve significantly. Right, services PMI is still in the expansionary phase, but I think it's just barely considered. I think like 50.3 or something. You know, it's almost like you wouldn't even consider like the expansionary phase or something, right? If the manufacturing PMI continues to contract, you could see the US dollar weaken. If you want to know where, how do I go here? Sorry. Yeah, if you want to know reference the news events, right, you can go to Forex Factory. I tend to refer to Forex Factory, right? So you can see over here, you got the ISM manufacturing PMI on Monday. So we got a nice bit of news announcements coming in. Tuesday is the RBA cash rate. Wednesday, I think nothing much I will consider on the Wednesday, but more on Thursday, right? The FOMC meetings, meetings, tongue tied, sorry. FOMC meeting minutes, right? Will be released. I think the key thing is it offers insight into the economic outlook, you know, future monetary policy of the US. So yeah, it's kind of take note of that. Federal funds rate, where are we? The Fed fund rate, where is it? I might have missed it out over here. I might have missed it out. Where is the Fed fund rate? That's why I should always put like dates and times to I think 5 point. No, not that one. Where is it? Uh, um, let me see. Fed fund rates. The overall fund. Okay. Meeting on July 26th. Okay. I think the key thing to take note of is that the market still predicts an 80% chance of 25 basis point rate hike on July 26th. All right. Followed by a potential pause and subsequent rate cuts heading into 2024. But I do want to cover on the labor data, right? So a lot of eyes will be closely watching the ADP non-farm unemployment change and JOLTS job opening, right? For this, where is that on the news calendar, right? This one, JOLTS job opening, right? And the unemployment claims. Okay, a lot of eyes will be on this before, of course, the unemployment non-farm payroll release on Friday, right? Is forecasted to be a little bit lower at 222,000, down from the bumper month, right? The previous bumper month of 339,000. All right. So just take note that a strong job report would increase the likelihood of a rate hike, which would mean that the USD is strengthened. Okay, so our eyes will probably be watching that over the next this week. I wouldn't say filled with super big news announcements, but there's definitely enough. There's Friday one, which is huge. RBA always a fun one to watch out for, right? And of course FOMC meeting minutes. All right, now let's go to the analysis today. I don't want to. I will take more questions along the way, right? Um, I'll take more questions along the way. If you have requests, please send them through, right? Otherwise, let's rock and roll today, right? So I think last week we did forecast a couple of things, right? Bitcoin at 1958, we were forecasting it that kind of reverse from that level. I don't think it moved that much. Yeah, so it continued to hold at that key resistance level. I would say, yeah, it's as long as Bitcoin holds below this key 31,709 or 33,000 level, we are bearish below it, right? So our view last week is that yes, it's a little bit dangerous now, right? There's a nice bit of resistance there, but yeah, at least price didn't deviate too much from that view. Okay. Yeah, price didn't deviate too much from the view. I would still, it was my same view would remain, right? I would think that you look to sell below this resistance. Look to sell below this resistance for price to make a push down to first support. Okay. Really quickly, take a look at Ethereum. Ethereum, we are forecasting bounce. I think Ethereum didn't work that well, right? It's one of the few ones that didn't work that well. So the nice thing, the good and bad thing, right? Good thing is that it touched our second support and bounce, right? But the first support, it wasn't able to bounce directly from the first support, right? And but just as equally importantly is identifying your second support, right? So it bounced on the second support to reach this resistance level over here. Fairly nice, right? But I don't think this is a this is uh no, this is gold, right? Sorry. Need to scroll to Ethereum, right? Where in the world is my Ethereum analysis? Oh, maybe it didn't cover Ethereum last week. Yeah, I don't think we covered Ethereum last week. So let's take a quick look at gold because there were people asking us about gold, what we expected gold to do, right? I think gold is over here though. We are forecasting for gold to make a bounce above, no, to hold quite nicely above the. Let me just expand this a bit. 1906 level, right? I think gold did hold quite nicely above the 1906 level. There we go, right? Gold is bouncing above the 1906 level quite nicely, right? So we're forecasting that price to just touch the level and bounce, right? It has since touched the level and bounce. This remains the nice little intermediate resistance that we're looking at, right? Sorry, this part over here remains a nice little bit of intermediate resistance that we're looking at. Okay, so gold does need to break this level, to kind of trigger a move up, right? New elements that have came into play, nice descending resistance line that is squeezing price. So I really like this because it means that it is finally forcing gold to make a move, right? You can see that it's being squeezed over here. So if it breaks the first support, we can expect a nice bit of drop, right? But if it breaks this level and it breaks this intermediate, we should be able to see quite a nice recovery to the 1978 level. All right, so we highlighted a very, very nice support level um, that is holding quite nicely. So I would say yes, there's our goal forecast last week to bounce above this level did work out quite nicely. Okay. Overlap support. Why do we pick this level? Because it's a very nice overlap support, as you can see over here. Very nice overlap support, right? A lot of Fibonacci level. So that is one thing which you'll notice that I use a lot of, right? So it's not only support and resistance, but Fibonacci, right? So we got a big 38% retracement, right? That goes from the bottom all the way to the top over here. So we got big 38% retracement, right? We got a nice zigzag. I think it's 100% projection over here. Okay. We got another 61.8 retracement from here all the way up to here. right? So even though, right, even though a lot of people were thinking that price, what I was sensing in the market is that people noticed that price broke this previous overlap, and they were expecting prices to really plummet, right? They're expecting prices to drop because this was a level that was so-called being consolidated a lot, right? And it finally broke. So people were expecting a free fall all the way down. But if you use Fibonacci confluence, you'll notice that there's a really, really crazy amount of confluence. I think there's one, there's two, there's three, there's four, right? And there's a nice overlap support, five. There are five levels over here suggesting that price might make a bounce, right? So we exercise a little bit more caution to say that yes, price might drop, but hey, there's a very big support level here. Keep a lookout for that. Okay, so that's one of the good things about Fibonacci, right? It helps you stay out of the wrong moves. Okay, um, we'll take a look at pound dollar. I think pound dollar did not change much. We are forecasting for price to hold quite nicely above the first support. It has continued to hold quite nicely above that first support, right? Looks like it tested, then it is bouncing up again. We remain bullish for pound dollar, right? Nice bit of Ichimoku cloud support, right? Nice ascending support, right? Price is giving me a little bit of maybe I have a little bit of a concern over here for pound dollar, right? My concern would be, yeah, did price break this level, right? But the reason why, we have our second support down here. So some people use a second support as a stop loss, right? It's because we need to give the trade enough breathing space. It might not come here and bounce up right away, as much as we hope, right? So we give it a breathing space, and why we give it a breathing space, right, is because of the bullish trend, the ascending support, right, the Ichimoku cloud, as you can see over here. There's a nice little bit of bullish momentum that suggests that price, even if it fluctuates here a bit, it is still technically being pushed up by the bullish momentum of pound dollar, right? So it's okay to give it that bit of breathing space. I am very, very particular when it comes to deciding how much breathing space to give my setups. All right. So in this case, right, I don't want to give the setups more breathing space than it needs. All right. So in this case, we are having the second support slightly lower, right? Because we do want to give this pound dollar setup a little bit more breathing space, right? Especially if it starts to fluctuate around here. Okay. Now, let's take a look at DXY. So for DXY, we forecasted that price would rise to the first resistance, right, which is at the 103.43 level, before making a reversal, right? I think that probably happened. There we go, right? So price rose very nicely, right? Price rose very nicely to the 103.43 level before making a reversal, right? Exactly as we forecasted, right? So in fact, if you go back 2 weeks, right, our forecast when DXY was down here was that it would go up and then reverse, right? So last week's session, yeah, it would reverse from here. The previous week, we said that from here, you actually rise up to the first resistance and reverse. So it's in line with what we're expecting. Now we are more confident of a bigger bearish USD for the rest of the week, right? And I like that, right? It's a nice descending trend line resistance, right? Price is just about on the extremes of the Ichimoku cloud. Very nice overlap resistance over here, right? That is reacting off. So we should be able to see quite nicely USD weakness for the rest of the week, right? We should be able to expect it to drop towards the 101.04 or 101.30 level, right? So this USD weakness forms the basis of a lot of the moves that we're looking at. So we're expecting USD weakness naturally from pound dollar. It means that we might this might be a fake out. We might be able to see prices rise quite nicely on pound dollar. Okay, now let's go to dollar yen. Before taking, can't remember what we forecast on dollar yen. Okay, so dollar yen, yeah, I guess looking for a little bit of pullback to rise towards first resistance, right, price has actually continued very nicely towards the first resistance level. So you got it on this setup early. Good for you. Good bit of pips that you're making. Okay. Okay. We take a look at euro dollar in a bit. Right. So I think dollar yen. Right. I probably look to sell on resistance. It's not that great though. Oh man. Euro dollar. I mean dollar yen. Testing the negative 61. Um, 78.6. Just let me map out dollar yen a bit more. See if I'm missing something. Um, dollar yen, a little bit risky, but probably to can consider this area as like a resistance area to potentially start looking at short positions, right? Yeah, potentially around this area, start looking at short positions to play the play the reversal back to first support, right? Sell on strength definitely, more sell on strength now, right? But I won't play a move that is too far away, right? So I won't play a move that's too far away for dollar yen because there is the ascending support line as you can see over here, right? Nice bit of ascending support, nice bit of bullish, the cloud for the Ichimoku is slightly wider, so it's stronger momentum, right? So I'll be looking to sell on strength for dollar yen, right? Let me take a look at euro dollar. Did we even look at euro dollar? I think we did not look at euro dollar last week. Let's take a look at euro dollar now. I think it was in the middle of nowhere. Yes, euro dollar was in the middle of nowhere. Um, it continues to be in the middle of nowhere. So a little bit hard for me to say anything for euro dollar. I would love to. I would love to, but it looks like it's terrible. I don't have a level on euro dollar. This is absolutely crappy kind of charts. How do you even do anything there? If anything for that matter, right, I would take note of this potential wave one, wave two, wave three, ABC4, and a potential wave five upwards. Okay. If there's anything for that matter, right, on the forward time frame, I might be looking a little bit at that, right? A little bit descending resistance line here, but yeah, it does look like there might be some sort of Elliott structure. One, two, three, rule of alternates, right? Bigger four over here, and then five going up. So Elliott wave is usually better, right? When for direction forecasting in the absence of like very clear technical structure. Okay, so in this case, euro dollar, I would kind of be looking at if we have USD weakening, then we should be take a look out for this, right? If price breaks the descending resistance, we might be able to see an acceleration towards the 1.000, big figure again. Okay, all right. So yeah, USD we could expect it to rise, but my forecast is that the market structure is terrible, it's crap, right? The only thing that makes sense with this is Elliott wave, right? So please exercise a little bit of caution with this setup, okay? Okay, Peter, I'll take a look at dollar CAD. Okay, I took that down. All right. Now let's take a quick look about what we looked at. Aussie CAD, that side of dollar franc. I think not much has happened on Aussie CAD since then. I know someone tends to request Aussie CAD. Yeah, not much has happened since then, right? We were hoping for prices to reverse a bit. It's still kind of at the level. It reversed and then it went up a bit, right? So it's back at the entry level for Aussie CAD. Not much difference to expect on Aussie CAD over here. I think it was a low probability forecast, right? Dollar franc, right? So take a dollar franc. I think there isn't much movement on dollar franc too, right? We might just jump into the request a little bit faster. Yeah, it's still in the middle of nowhere, right? Dollar franc, right? This should not be sell entry. This is yeah, I think dollar franc remains the same, right? We're still at the key resistance level. But what I do like about dollar franc is that if we're expecting for prices to go down, like in the forecast, right? Where's my channel? Yeah, if you're expecting prices to go down, like in the forecast, that means, right, USD will weaken, right? Which means that it's in line with what we're expecting on USD weakening here, okay? So it remains the same it remains the same, right? I actually quite like this because a lot of the levels are lining up. We are seeing dollar franc on a key resistance level, right? DXY on a key, DXY reversing from this channel, no, from this descending resistance line here would be good for dollar franc being pushing down with that USD weakness towards our first support over here, right? So that works out in our favor, and it also works out in our favor for dollar yen reversing of this key resistance level to go down. So a lot of it sings the tune of USD weakness. All right. And of course, for gold, I actually covered gold already. Is that yeah, for Ruben, I actually covered gold already. Take note, we are still bullish above the first support, right? So a little bit of USD weakness might actually help us on this front, right? We should be able to see a bounce from here, right? Hopefully a bounce, but take note of the descending resistance and the pullback resistance, right? Only when price breaks this level, then we can see a nice rise to 1978, but we are at a pretty key deciding level across a lot of the instruments, right? I didn't touch it last week. Keaton looked at Eurodollar in his analysis last week. Yeah, maybe he did, right? But anyway, right, in today's analysis of euro dollar, a little bit more Elliott wave structure kind of thing that hopefully we can see rise up towards the big figure of one. Okay, crude oil US 30. All right, I'll start taking a look at them. US 30 first. Okay, I think not much change on the US 30 front. The indices still key resistance over there, right? I think we did forecast US 30 that it will start to yeah, it will bounce a bit and then it will rise up towards the first resistance, second resistance. Last week it did seem to work out quite nicely. It dropped down and it started to rise up. Man, that's a problem with US 30, right? There's this area where you can't really forecast anything. Yep, I would kind of highlight this area here. It seems that price historically keeps reversing off this area, right? So we would require price to break beyond that to trigger a move up, right? Man, US 30 is a little bit hard, right? Dollar cat franc, okay. I'll look at them in a bit. US 30 is a little bit tough. Too choppy. It's so choppy. I can't really forecast much, but I would think that for this week we should be able to see a reversal back down, right, before going back up. Right, that'll be my view this week. I will kind of wait for price to drop a little bit more first, for US 30. Okay, the charts are not that great. It's very hard to find a clear movement when there's so much weeks happening. All right. Okay, we got crude oil though, right? WTI crude oil. I think crude oil we were forecasting for price to drop last week. Did we? Yeah, crude oil. We were forecasting for price to drop down towards the first support. it has continued. It actually has dropped a bit and rose a bit, right? But we are still bearish, right, on crude oil, expecting it to drop further down to the first support. So not much change there, right? Overall, but still seeing that nice little bit of bearish momentum that is pushing prices down. Nice little bit of Ichimoku too, right? Pushing prices down. So it should be enough for us to see prices drop towards the 62 level. Okay. Um, um, dollar CAD. Okay, we had a request for dollar CAD. Yep, I missed out dollar CAD last week. Um, okay, not this binary, right? Someone did my overrode my analysis, right? Dollar CAD. Hmm, tricky. Ay, okay, it's tricky. I would kind of want to call a reversal on dollar CAD, but this ascending support line is a little bit it's a pain. This ascending support line is a bit of a pain. If you want to play a little bit of a move here, oh man, it's so tricky. Okay, the ascending support line, strictly speaking, right? Ascending support line, you pick it out here. Short term for this week, maybe playing a move down to the first support here, right? Maybe playing a move down to the first support, right? For dollar CAD, it's a bit tricky, right? But we could see a short-term reversal to this level. I'm a little bit wary about these major ascending support, so I don't want to play all the way down. But I think over the next few days, this week, you could see more than you could see more than 100 point drop towards the 1.31 level, 10 level, right? A little bit lower confidence on this setup, but I would consider this, right, as one of the key levels to watch out for dollar CAD. CAD franc remains the same, right? The analysis for CAD franc, right? Last week we forecasted that CAD franc would reverse, right? So if you take a look here, last week we forecasted that CAD franc would reverse from this key resistance level, right? So it was testing this key level over here. We forecasted price would reverse, right? And true enough, price has started to reverse very nicely. So if you got in early, good, good bit of risk to reward. We should be able to see prices drop all the way. Intermediate risk level would probably be over here, right? This would be the intermediate risk level that I will watch out for CAD franc. Okay, yeah, this would be the intermediate risk level. I'll watch out for CAD franc as it makes a drop. I think, what do we not cover? We didn't cover Euro Aussie. Euro Aussie, we forecasted last week that it broke a very nice overlap, right? And it would rise up towards first resistance, right? I think, okay, I think it worked out very nicely, right? So it broke the descending resistance over here, and it rose up to the second resistance, right? No, I mean to the first resistance. Ah, crap. First resistance over here, right? And it broke this. Was it this level it broke? Yeah, this was the first support, right? Was this the move? Yeah, this was the move. So the important level is that we reference this key overlap in the past, right? So a nice move, we forecasted that it will rise up to the first resistance. And what I like about our forecast is that price did rise, not only there, but once it touched the level, it reversed, right? I swear, probably the no no idea why. Yeah. I feel like a lot of people are looking at our analysis, right? Everyone decide to get out over here, right, and push the prices all the way down, right? So what's important with any kind of forecast is that you're able to forecast when to exit, right? So in this case, right, we can see that it worked out very nicely. I touch the level and then reverse, right? So it's not only where you enter, but it's also where you exit. Okay, so very nice analysis on EURUSD. I really like it. Okay, what do you think about DEX? Yeah, DEX is German. I have analysis in DEX. I don't think it's much. Key resistance remains at 16290, right? Last week did we forecast DEX? No, there was no DEX last week. This key support level, 15707, right? This remains a key support level, resistance level, right? Just between these two. I expect it to fluctuate between these two levels, right? If it finally breaks this level, we can see prices go up. But 16290 remains level to be broken first, right? And then of course the first support level over here, if it breaks this, we can see a drop down to the second support. Okay, right? Yes, guys, Nick. Thank you, Nick. Right. If you found this today's session useful, please help me smash the like button. It really, really helped the YouTube algorithm, right, for us, right? Yes, very necessary, right? Thank you very much, guys. Help me smash the like button, right? Thank you very much, right? I hope you found today's session useful, especially the start of the session where we're sharing a little bit more, right? If you have questions you want me to kind of answer now, feel free to send it through, right? I'll do my best to answer them, right? We got a couple of minutes left, right? Don't mind getting a little bit rest later or so, right? It's okay for me, right? I think. Right. So yeah, um, thank you, Nick. Thank you very much, guys. Right. The Wednesday session, no updates on that yet. I think the survey results unanimously, right? Almost 100% of you guys say that you want a session, right? On Wednesday, so they are heavily considering it, right? So I'll update you guys on that. Whether it goes through, right? Daniel, thank you very much, right? To see what time frame you're on. Is there easier way to see what time frame I'm on? Maybe. I'm usually on the 1 day time frame. Almost everything I do on the pre-market analysis is the 1 day time frame. I could zoom in a little bit more in the future like that, right? If it helps you see it, zoom in and see it a little bit better. But I'm usually on the 1 day time frame. All right. Um, yeah, I rarely at most go down to 4 hours, but usually on the 1 day time frame. Yeah, sorry about that. Right. Right. Yeah, thank you very much, Nick. Right. You can tune in to our live trading session. Right. I think we got another live trading session where we dive slightly deeper into the shorter term time frames in a bit. I think the session um is gonna be done by Keaton today. So Keaton will cover a lot more the fundamentals today, right? So do sign up for a session, right? I think he has a master's from Imperial College, really, really smart guy, right? So he'll give you a better understanding of the key fundamental news events for the week. I've covered the technical ones. You can go take a look at the fundamentals, right? Thank you, Solomon. Thank you very much, guys, right? Yes, Nick, I think it's pretty worth it if you use it a lot, right? Thank you so much, guys. Stay safe, trade safe. Daniel, what time? I think it's about 12 hours, 12 and a half hours from now, exactly, right? That's Keaton session. Okay. Thank you very much, guys. Stay safe, trade safe, peace out, right? I'll catch you guys in the next session. If there's a pre-market analysis, I'll catch you then. Otherwise, you might see me pop around when Keaton's doing the analysis later. Okay, guys. Thank you very much, Angel. Right. I will continue to keep it authentic and passionate. Right. Thank you very much, everyone. Okay. See you guys. Bye bye.